Good afternoon, friends. Now, today I am with accounting process again, and it is class number 11. Class number 11. Okay. So the topic is ascertainment of results. Ascertainment of results. I have repeatedly told you what are the different aspects of accounting process: identification of transaction, finding out debits and credits, then journalizing, that is making entry in the book of prime entry, that is journal, journalization. Then the process is putting the entry from journal to ledger, that is known as posting. In ledger we have another work, that is casting, means the totaling of the two sides, the debit side and the credit side. And finally the another part of ledger, that is balancing, the difference of amount from between the debit and credit side in the balancing. In the ledger, each and every ledger account is known as balance, and that is the process of making that is known as balance sheet. Then after posting, after ledger, what we have to do? Our objective is to ascertain, our objective is to know the arithmetical accuracy of the accounts there. You have toiled hard, you have effected journal entries, you have posted ledger, you have costed, you have balanced the ledger accounts. Now during this long process, there is every possibility that there may be some clerical error, the error especially with respect to arithmetics, numbering. And in order to test the arithmetical accuracy of the account sketch, we do prepare one statement. And what we do? We collect all the ledger balances. We collect all the ledger balances, and then we group the ledger balances into two parts. One, all the debits in one group and all the credits in the other group. And if both the debits and credits were total, these two sides are equal, then it will ensure us that our accounts give the absolute picture of arithmetical accuracy. But friend, one thing is that the arithmetical accuracy is not the conclusive proof of the accounts kept. There are other errors which are not found out on the preparation of summarization. After the preparation of summarization, although your provenance agreed, it does not justify that all the accounts, you have made the accounting correct wrong, because there are different errors which may not be identified, although the tolerances agree. And that area is a different thing, and it would be taken up in the latter date or on some latter date. Okay. Now, next process. Next process is what? The process is ascertainment of the results. Now, I have to say something with regards to this process. First of all, what is your objective? You are carrying on the business. It may be merchandising activities, that is trading activities, purchase and sale of goods, Okay, purchase and sale of goods. You are purchasing the goods and selling the goods, selling the same goods for whatever. And it may be purchasing goods or raw material, transforming them to finished goods and selling the finished goods. That is industrial activities. So whatever you do, you have invested some. What for? Because I want to generate some surplus. Okay. Say I have carried on business for 1 month. After 1 month, my objective would be to find out whether the amount invested in the organization, whether the assets, total assets, net assets invested in the organization is higher at that time, that is at the end of 1 month, in comparison to what it was at the beginning of the activities. Okay, that means I am telling you you have carried on your business activity for 1 month. You have started with the net assets of rupees 50,000. Now at the back end of this 1 month, you would always try to learn whether your net assets has been increased or it has been decreased. If it is increased, it's a good sign that you have earned profit. Say it is 60,000. Now it means you have that opening net assets was 50,000, closing net assets is 60,000. So difference is that 10,000. That 10,000 is an appreciation in your net assets. That means it is surplus. You have generated surplus, and that surplus is known as profit. Okay. Although we say profit and loss account, still I am telling you the term surplus is the very general term to be used in the process. Okay. Next, your net assets at the time of investment were 50,000. Now at the end of the month, you are getting that in your hand you are only having the net assets of 48,000. What is the meaning? What is the meaning? That you have generated a negative surplus. That is depreciation in the net asset. That is loss in the net assets. That is the loss. Okay. So it is the deficiency. So if positive, surplus; if negative, it is deficiency. Positive is known as profit, deficiency, and negative is known as loss. Okay. Now, what is the regular practice? What is the general practice? General practice is that an account is a going on concern. Sorry, a business is a going on concern, because you have started the business not for a day, but for years. So for years to come. So it has this long life. But you do not know, you cannot ascertain the life. There are different organizations which are working for more than 2,200 years. Okay? There are a good number of sweet shops in Kolkata, Keshinag and many other. They are working for nearly 270 years. Okay, there are huge number of shops. Those are working in the Bhadreswar nearly of 3 years. Okay, and more than 3 years. So again, there are some organizations which are only for 10 years or 12 years or 15 years. Okay, so the life you cannot ascertain the life of the organization. Okay, that is why what we do. Your objective is to find out what is the net appreciation of my asset. What is the net appreciation of my assets? But this appreciation can only be determined from the when it was started, the amount was, and when it comes to an end. But the end is not known to us. Because business is a going on concern. Okay, it is expected whenever it is open. Whenever you start business, your objective will be to carry it on. If you say, no sir, I am not at all ready to carry it on, I would like to carry it only for 1 year. So it should not be a business. It would better be termed as venture. Venture, this term I have already told you in our commercial application class or commerce class. So it should be venture. Business with the expectation that it would have no end. It will go on carrying on this activity. So it is known as business is a going on concern. And when business is going on concern, accounting is concerned with what? Accounting is concerned with business activities. Okay? So accounting is a going on concept. Okay? Going on. So accounting is a going on process. There is no end of the process. You have started business for 1 month, you have carried it for 1 month, then in the initial you have balanced your trial balance, you have balanced your accounts, you have summarized your statements, you have seen that I have got, my accounts are very good, I have got no arithmetical error during this period of accounting. Then I will start my second month, then I will carry third, fourth, fifth in that way. Okay? Clear? Then our practice is that during a period of 12 months, what is the net results? What is the net results during the net results of the activities carried on during the last 12 months? Okay, you may prepare that account you make that, sorry, that you can do with in preparing a statement of profit and loss. Okay. In case of trading concern, I am not taking any non-trading concern. I am considering only the trading concern. Okay. So I am carrying on the business. Okay. I would like to know the results. You can prepare for finding out the results. You should prepare a statement of profit and loss. Okay. It may be for the month. It may be for a period of 3 months, that is quarterly. It may be for 6 months, half yearly, or it may be for 12 months. Okay, so it may be 1 month profit and loss statement. It may be quarterly profit and loss statement every quarter, every 3 months, or it may be half yearly, or it may be annual. Okay, whatever it may be, I am telling you, there must be a starting time and there must be a mid, and it should be fixed. So it is 30, next one is 30, next one is 30. Now if the 3 months of their limit is 90, then the other one is 90, then the other one is 90 days, then the other one is 60 days. Okay? And if it is 6 months, it will be 180 days, and it will be also 180 days. Okay? Now if it is for 100 years, so it will be 1 year, so it will be 365 days. Clear? So and this is known as annual account. So annual account, half yearly account, quarterly account, monthly account. So there are different time span covered. But whatever you do, the process is you have to find out the profit. How to find out the profit? In order to find out the profit, you should prepare a statement of profit or loss. Statement of profit or loss. Yesterday, I gave you a list of the expenses. Okay. First of all, in a simple language, you think, what is the profit? Profit is the difference between the sales revenue. Okay. Difference between sales revenue. That is the amount generated out of the sale of all goods and services. Clear? And minus total expenses incurred for generating that sales. Understood? If I have effected sales out of these students, and for effecting that sales, I have made different types of expenses of 1,80,000. So that 20,000 is one. Clear? So that is. Now this 1,80,000 is not a single expenditure. Okay. There are huge number of expenses, huge items of expenses that I have to make, and a list of that expenses I have given you yesterday. Okay? Yesterday I have told you that the expenses are of different types. One is purchase expenses, understood? One is manufacturing expenses, and another group is administrative expenses, another selling expenses and distribution expenses, then financial losses and financial losses. Financial gains is gains are different, that would be taken into separately. Okay. So from the total sales, I have deducted rupees 1,80,000. That 1,80,000 is the total expenditure, total outflow. It may be instant, it may be deferred. Okay. It may be today, it may be tomorrow, but it is the liability. So the total expenses will be deducted from the net revenue. Understood? So that difference is known as our profit or the surplus. Clear? Now, yesterday I gave you the list, but while you are deducting, the expenses are of different categories. Some are purchase expenses, some are manufacturing expenses, some are administrative expenses, some are selling expenses, some are distribution expenses, some are financial gains, and some are financial loss. Financial gains and financial loss I will take separately. Where I will go on carrying it for other classes, in other classes. Now, how would I am not considering manufacturing expenses right now, because here in our today's analysis, I am considering only a firm which is engaged in merchandising. Okay, merchandising means trading. Who has been meeting the functions, two functions. One is purchase of finished goods and sale of finished goods. Okay, so he has got two functions specially, purchase and sales. Clear? So what are the expenses you would have to meet? You have to meet purchase expenses, and you have to effect the selling expenses. He has to meet distribution expenses, and he has to meet administrative expenses. Administrative expenses is common in all cases. Okay, but if it is trading organization, or if it is merchandising organization, he has got two basic functions. One is purchase and other one is sales. But if it is manufacturing organization, so there are three wings. One is purchase of raw material, then the last one is sale of raw material. Another function is the manufacturing. So for that we have to prepare manufacturing account, that or the different cost sheet. That I will take up later on. But for today's analysis, I am making it a compact one, and today we are considering only what functions or what expenses. We are considering only purchase related expenses. Clear? Now see, an organization during a period of 12 months ended on 31st/12/2020. Sorry, 2020. No, sorry, it should be 2019. I am taking. Okay. So he has effected sales of rupees 4,87,000, and out of that the returns effected were 20,000. So what is the net sales? Net sales is 4,67,000. Okay. So that is the net revenue. That is the net revenue the firm has generated during this period. Clear? What I have told you earlier and repeatedly, that if you want to earn the surplus, ascertain the surplus, what you have to get first? I have to get the net revenue. Net revenue generated within the organization during a particular period. And the net revenue comes from what? From sales minus return. Clear? From this net revenue, we should first deduct the purchase related expenses. Clear? Purchase related expenses. What are the purchase related expenses? First of all, the cost, purchase related expenses, the total revenue, net revenue we have generated. From that you deduct, number one, the cost of the goods sold. Clear? Cost of the goods sold, because I am selling the goods. Now since I am selling the goods, I have to deduct from that, from the total revenue, what? The goods sold. Clear? Now what is the cost of goods sold? This is the first thing. The cost of goods sold we can generate from where? Say I had opening stock of rupees 25,000. Understood? It is the stock I had at the beginning of the period. It was the stock. Now I have effected purchase of these 3 lakhs. Then out of that purchase, I have returned goods of rupees 10,000. So what is the net purchase? Net purchase is 2,90,000. I had how much amount? I had 25,000 in hand. Okay, sorry. So the goods amounting to rupees 25,000 were in my hand at the beginning of the period. Now I have purchased the goods of rupees 2,90,000 during this period. Now what is the total amount of goods I had? 3,15,000. But here, in my stock, I am getting 40,000. So 40,000 is the stock remaining in my hand. So how much goods have been utilized? I have utilized 2,75,000. Clear? So it is the 2,75,000 the goods amounting to rupees 2,75,000 was utilized for generating sales. Clear? What we have to find out first? We have to find out the net sales. Net sales. Net sales is sales minus return. From there we should deduct that amount, which was related to get that sales. Say you have purchased 10 pen from Kolkata and it cost you rupees 100. Okay, it cost you rupees 100 and you are selling it at rupees 150. Okay, 150. So this is your revenue is 150 and the cost of sales, that is cost of goods sold, is how much? Is 100. So what is the difference? That is known as 50,000. Clear? Now someone over is saying, no sir, one thing that you have not considered. And yes, sir, कलकत्ता जाना, कलकत्ता से आना, इसके लिए तो खर्चा था। सर उधर हमारा ट्रैवलिंग चला गया, 20 रुपया चला गया सर। ट्रैवलिंग एक्सपेंसेस, ट्रेन फेयर है, ओके, ट्रेन में सोचिए, ट्रेन में पैसा नहीं दिए थे, फिर भी ऑटो ऐसा था ना, इसके लिए 20 रुपया गया। ओह अच्छा, ये इसके लिए, हाँ ठीक है। That means उसको ले आने के लिए, to bring that amount, they bring that goods, I have made expenses with regards to carriage. Okay, that is carriage inward. Okay, carriage inward. Clear? Carriage inward means the expenses incurred to take the good from the place of purchase to the place of consumption, or at the place of consumption, that is purchase. Okay, so there are other expenses, those parts to be taken into account. Now, in case of business house, what is happening? All that from net sales you deduct all purchase related cost. Okay, all purchase related. Purchase related cost first means which one? The goods, cost of goods. Clear? Number 2, the brokerage. Yesterday I told you the brokerage paid for purchase is a purchase related expenses. The commission paid on purchase is purchase related expenses. Carriage inward is also purchase related expenses. Okay. So from net sales, what should we deduct? From net sales, we should deduct cost of the goods sold, and that is goods sold, that is cost of purchase of the goods sold, and commission paid, brokerage paid, carriage inward, and there are other persons. There are many persons who are working in the organization. It may be 1, it may be 2, it may be 3. Who are paid the amount, that is wages. Clear? So that is wages. Clear? So wages is the amount paid to the staff. Clear? But these wages has got different other meaning. If the wages is paid in the manufacturing organization, then we should consider it as manufacturing wages. It would be taken into account in manufacturing whenever we will be preparing manufacturing account. Right now, this wages is trading wages. Understood? So this is known as trading wages. Now you see that the total sales this much, this return this. So this is the net sales. From net sales, this something are deducted. What are to be deducted? That is the cost of goods sold or cost of purchase of the goods sold. I would like to. It is better to say cost of purchase of the goods sold. That is here opening stock of the goods, and the net purchase to be added to that. The total purchase is how much? 3,10,000, and so it is net. Deduction 10,000. Deduction is a return. So it is net amount of goods I have purchased this much. So total amount of goods I have in my hand for utilization, it is 3,15,000. Out of that, I have already maintained a store. That is maintained a stock. That means I have utilized only goods of 2,75,000. Okay, clear? So that amount is to be deducted from this. But with that amount, there are other expenses. What are the expenses? That is commission on purchase, brokerage on purchase, carriage inward, and purchase. So this is the total cost. And from this total net revenue, I am deducting this total cost, and thereby I am getting the profit. And this is the surplus. And that surplus is known as gross surplus. Okay, gross surplus. Why? Can anybody may answer me? Yes. Someone I think is answering, is making their answers ready. Someone might have been making their answers ready. There are other expenses I have already spelled out yesterday. What are the expenses? From here we have to deduct. From here, from gross profit we have to deduct administrative expenses. We have to deduct selling expenses. Clear? And after we have to deduct financial charges. Okay? And after that we will get the net profit. Clear? But I am telling you friends, before coming to the net profit, I have my own methodology. From gross profit, we should deduct all the administrative expenses, okay, and selling expenses and distribution expenses. Thereby we will get all trading profit, net trading profit, not net profit, net trading profit. From that profit to that profit we will add financial gains. Clear? And it will enhance the total net surplus, okay, and from that you will deduct our financial losses and financial expenses. So from that you will get the genuine net surplus or net profit. But that would be analyzed, and that would be analyzed detail in later date. But right now, listen to that. This part we are finding out the gross profit in this way. So what is the gross profit? Gross profit is the difference between the net sales and the minus the total cost of goods sold. Total cost of purchase of the goods sold. Total cost of purchase, mind you, total cost of purchase, cost of goods sold, or cost of purchase cost of purchase of the goods sold. Purchase of the goods sold. Cost of purchase means it takes into account the material cost, the cost of any commission paid, any brokerage paid, the carry output, and the wages. Clear? We are getting gross profit. This is statement income. Now, this statement we are coming to trading account. How it is? This statement we are trading in that way. It's an account. As you know, account has got how many aspects? One is debit aspect and the other one is credit aspect. All expenses are debit, all incomes are credit. So I have written all the incomes over here. What are the income? Basic income is sales less return. So net sale is this much. Clear? Here what it is? Here it is opening stock, and here it is purchase. And what I have done over here, the closing stock has been deducted from here, okay. And instead of doing that, I am adding the closing stock over here. Clear? But you may deduct here, you may deduct it from here. But I am telling you, friend, because it is some specific practice. What for? There are different utilizations. Ultimately, a day will come when I will let you know what is general property, what is closing entry. These are basically closing entries. Okay, and a special account is prepared with this. Yeah, so that is some complex issues, and it would be made simple after the detailed analysis of all this. Okay, so whatever I am telling you today, this is our part of trading account. This trading, what is that? I am coming to that. What is the trading account? Trading account is the account that shows the gross profit of an organization. Okay, trading profit. Trading is that who prepares the trading profit? Trading account. Trading account is prepared by the merchandising firm. That is a firm who are concerned with the two functions. One is purchase of goods and the sale of that goods. Okay, what you are purchasing, you are selling. Clear? You are purchasing under and selling under. That is a trade. That is merchandising. You are purchasing under, selling homeland. So it is an industrial activity. Okay, that I am not taking right now. So how is trading account prepared? It is going to be prepared that all incomes are credit. Sales is an income, net income minus return, and cost opening stock is a cost of the goods sold. So it is written over here. Purchase, that is a cost. And brokerage paid on purchase is cost debit side. Carriage on, commission on purchase is a cost. It's an expense. Carriage inward is an expense. Wages is an expense. Okay. So you total this part. Sorry, not this part. Okay. Not this. Okay. So this is total is 5,07,000, and here it is also to make it 5,07,000. We are getting a surplus of how much? 1,20,000, and that 1,20,000 is your gross profit. Clear? So this is the total part of trading income. Now what we will do? Next day, tomorrow I will take a profit and loss account. What I will do? From this gross profit, we will deduct administrative expenses, number one. Then we will deduct selling expenses, and then we will deduct distribution expenses. What are they? I am giving you for your analysis, because you must bear it in mind. Tomorrow it will be easy for you to grasp the topic. From gross profit, you will deduct all the administrative expenses. What are the forms of administrative expenses? Number one, all the office expenses. All the office expenses. Number one, office electricity. If it is purchasing center electricity, then it would have come over here, okay? But whenever it is office electricity, office means the center of administration. So office electricity, office rent, office rates, okay? Office salaries, okay? Office stationery, printing and stationery, okay? So all these are the administration. There are many. So all these will come under the profit. From gross profit, we will deduct this. Number one, administrative expenses, and we will also deduct selling expenses. What are the selling expenses? Cost of sales. Okay, sorry. Cost of sales means number one, carriage outward, because you are selling the commodity and making the commodities reach to the place of the customer. So your carriage outward, that is. Number two, that is also the transportation, distribution charge. Then it includes any commission paid on sales, any brokerage paid on sales, advertisement, publicity. Okay, all these are the selling and distribution expenses. So these will be deducted. From gross profit, we will deduct this and these two category of the expenses, and we will get the net trading profit. Okay, and that net trading profit will be taken again in that side. We will add all the financial gains, and here we will add all the financial losses and interest paid, bad debt, okay, and like interest on mortgage, and here bad debt recovery and like all this. So in there we will get the net profit of the operation, and that is your net results. Clear? So today, friends, we have completed our trading account. Tomorrow I will take a profit and loss account. Okay? And after that, in my next class, that is the class after day after tomorrow, I will give you the total list of the accounts, because what is the nature of the account, and after that I will take up the balance sheet. Okay? Because balance sheet is a very, very strong area that is to be taken into account, because it is the balance sheet. Balance sheet is the statement which is carried for every year. Okay? And all the items which are shown in the balance sheet, they are the balance item that is taken and to start the business for the new year or new session. So that is some different issue. So before tomorrow, our topic will be profit and loss. Okay. Now here I think if you have any queries, so please let me know through your comment in our Instagram or Facebook. So thank you very much. But before that, I am again letting you know one thing. Our task in every business is concerned with earning profit. Business is concerned with earning profit, and profit is found out using ascertainment of the statement of ascertainment of profit, and it can also be found out with the help of trading account. And when it is ascertained with the help of statement, it is known as statement of profit and loss. And when it is prepared with the help of account, it is known as trading and profit. Clear? So thank you very much. Have a nice day.